European markets are still extremely nervous, and we saw that the euro exchange rate dropped further. We're below 114 this morning, so therefore we really clearly see there is nervousness, there is uncertainty, and investors always associate Europe closely with Turkey. I think obviously there is exposure, but I think we should also put it in perspective, and the exposure is not big enough to really lead to big spillover effect. We have some Southern European banks with a relatively high exposure to Turkey. Of course, there is trade with Turkey. There are investments also coming from Germany, direct investments in Turkey, but the overall size is not big enough to really create a recession or a new banking crisis in continental Europe. So I think in the short run, Turkey should be able to fulfill its commitment by paying the coupons, the yield to foreign investors. But obviously, if this situation continues, if the lira continues to drop, if more foreign investors actually leave Turkey, if interest rates go up further, then obviously the risk of a default is on the horizon. When this will be, no one can tell. I think we have two causes of the current Turkish crisis right now. One is a long-term cause, which is high inflation, a bit of less confidence in economic policies of the president. And we've seen a continuous fall of the lira already before Trump announced the sanctions and the tariffs. Obviously, Trump's announcements, his tweets over the last week, more or less kind of accelerated the situation, led to further escalation. So it's the both factors which have created the current mess.